Hi there, I'm Edward Khalstian, founder of Egg Capital, and welcome back to the channel. Today, we're taking a little break from analyzing stocks, and instead, I'm going to share the 5 most important investing lessons I've learned in my 10 plus years of investing. And trust me, if I'd known these earlier, I could have saved myself a few headaches and probably a few embarrassing stories. So let's dive right in. Peter Lynch, the legendary investor, author, and the man who made "invest in what you know" a mantra, definitely had a lot to say about these lessons. Let's see how his wisdom translates into some of the biggest investing lessons I've learned. Alright, lesson number 1. Time in the market beats timing the market. You've probably heard this a million times, and guess what? It's true. You can't time the market, and anyone who says they can is probably going to sell you some magic beans. The key to making money in stocks is not to get scared out of them. So stop trying to pick the next big stock and time your moves like you're some kind of stock market wizard. Trust me, you're not. I've tried. Instead, just stay invested and let the magic of compounding do its work. Albert Einstein didn't call compound interest the 8th wonder of the world for no reason. I will give you a personal experience of mine. In February 2020, I was on a 2-week holiday with my wife in New York. I was living the life, outperforming the S&P 500, as you can see in my portfolio return at 8.9% compared to 4.7% for the S&P 500. Just before COVID hit. On my 25th birthday, the New York Bull gifted me a loss on paper of 32%. But what you can also see in my returns is that I did not panic and sold off, but held on to my stocks. I believed in the potential of the companies I owned because I understood them. And fast forward to August 22, and we were back at the same point in February, just before COVID hit. So stay calm and don't try to time the market. Lesson number 2. Active trading will make your broker rich, not you. Now, if you love paying commissions and making your broker's vacation fund fatter, by all means, go and trade every 30 seconds. But here's the truth. Every time you trade, you're pretty much playing a game of roulette. You have better odds at the casino than you do trying to outsmart the market with short-term trades. Research suggests that approximately 70 to 90% of traders lose money, and I can tell you, in the first 3 years, I was losing money through trading as well. On top of that, I would like to add that you most likely will not only lose money, but also your most precious commodity, which is time. So do yourself a favor, take a seat, relax, and stop thinking you're going to beat the market with your 15-minute trades. You're a broker, thanks, Hiro. Alright, lesson number 3. You need the stomach, not the brains. Peter Lynch said that investing is like a roller coaster. You can know all the technical stuff about the ride, but if you're not ready for the stomach drop, well, good luck. It's easy to get caught up in all the analysis and fancy terms, but at the end of the day, it's all about staying calm when things get rocky. The market goes up, the market goes down, such as the recent drop caused by the DeepSeek news. That's just how it works, so get your stomach ready because there will be some bumps along the way. As long as you hold on and stay focused, you'll make it to the end. And maybe even enjoy the ride. Over time, you start to build a thick skin for market crashes. Sure, it's still not fun to see your portfolio in red, as I had on my 25th birthday, but if you keep the big picture in mind, you'll be just fine. If that scares you, no worries. Start small and build your confidence like you're training for a market marathon. Fun fact. Historically, the stock market has never been down over a 20-year period. Sure, there have been plenty of rollercoaster moments along the way, but in the long run, it's always found a way to recover. So keep calm and trust the process. Lesson number 4. Observe the world around you. This one is straight from Peter Lynch's playbook. He made millions by looking at everyday businesses that people were already using and loved. Like if your local coffee shop or favorite store is always packed, maybe it's worth looking into how that company is doing in the stock market, if it's a publicly listed firm. See, most people are too busy scrolling through their phone to notice the world around them is actually giving them all the answers they need. If you're waiting for someone to hand you the perfect stock pick, good luck. Start noticing the trends around you and you'll see opportunities everywhere. Okay, personal example time. Back in July 2020, I bought 200 shares of Apple stock. Why? Well, every time I walked by an Apple store, it looked like a scene from Black Friday. Crowds everywhere. And I thought that's a pretty good sign this company's doing something right. So I did some digging, checked out the fundamentals, and thought, hey, this stock looks undervalued and has some solid growth potential. Fast forward to October 2023, I sold all my shares and made enough profits to buy new iPhones for, well, probably the rest of my life. So yeah, sometimes a little people watching in the mall can really pay off. Finally, lesson number 5. Know what you own and why you own it. This is one of Peter Lynch's golden rules. If you're investing in something because it's popular or because someone on Reddit said it is going to the moon, then you're just guessing. And we usually know how this works out. Seriously though, if you don't understand the business you're investing in or why you're invested in it, you're playing a risky game. I mean, can you explain the business model of that company? Can you explain the future potential? If you're not able to explain to a 10-year-old why you own a business, then it's either time to do some homework or find something else. It's your money, so treat it like it deserves to be treated. So there you have it. 5 lessons from Peter Lynch and over 10 years of my own trial and error. If you take these lessons to heart, you'll save yourselves a lot of headaches and maybe even a few sleepless nights. Remember, it's a marathon, not a sprint. Invest for the long run in companies you understand and build immunity to market panics. Observe the world around you, and most importantly, don't make your broker rich while you're out there gambling away your future. If you liked this video, don't forget to subscribe, hit that like button, and let me know in the comments which lessons you've learned from your own investing journey. Until next time, stay invested, stay smart, or at the very least, stay calm when the market drops. Thank you for watching and see you next time.